Well, good morning, everybody. My name is Dominika Taraskevich, and this is David Ellum. We're with the Office of the Chief Auditor, which is the office of the PCAOB that's primarily responsible for standard setting. So, let's see. So, same disclaimer applies to us. This presentation is provided in our official capacity as PCAOB staff members, but the views expressed are ours and do not necessarily reflect those of the board members, or other members of the staff. Okay. So today, our presentation will include a brief overview of the board's current standard setting agenda, including recently issued proposals. We'll also discuss 3 standard setting projects that were recently adopted by the board this year. And these include the first, which is the amendments related to aspects of designing and performing audit procedures that involve technology-assisted analysis of information in electronic form. I will not be repeating that, so I will refer to that as the technology amendments. The next project is AS 1000, which addresses the general responsibilities of the auditor in conducting an audit, and QC 1000, which is our new quality control standard. Finally, we'll do a deeper dive into the confirmation standard, which was adopted in 2023 and is becoming effective very soon. So before we get into the details, we thought it would be a good idea and helpful to just walk through where you can find information on our website related to standard setting activities. The board has many projects underway, and the PCAOB website is really the best place to get the latest information on those activities. While we can't quite run a demo today, but what we'll do is show you some screenshots that we think will be helpful. So what's on the slide currently is what you'll see once you get into the oversight and the standards page. You'll see this menu. All of our standards-related projects that the PCAOB is currently working on can be found by clicking the second tab, Standard Setting Research and Rulemaking Projects. This is also the place that you can go to if you'd like to comment on an open proposal. The projects are listed there, and they'll take you to the docket page. While we don't have any projects in an open comment period right now, it is important that all of our standards can be used by both larger and smaller firms. So we definitely encourage you to take note of those PCAOB's rulemaking process and really provide your perspectives. It's important to us to get those perspectives. Let's see, okay. So when you go into the agenda page, you'll see several components that are listed on the slide, and this is kind of a simplified version of it. The first category is the recently completed proposals, followed by the recently completed standard setting completed projects, yeah. And this is the material that we're going to be focusing on today. As for the rest of the categories, the short-term projects are those where board action is expected in the next 12 months. So aside from the proposals that we'll touch on today, this category currently includes projects to update standards on going concern and inventory. The midterm category is where staff is actively working on a project, but board action is not anticipated in the next 12 months. Then there we have the ongoing research and rulemaking projects. The research projects include research on the use of data and technology, and communication of CAMs, or critical audit matters. These research projects can inform current standard setting activities. In some cases, they lead to staff guidance or spotlights. For example, we recently issued a spotlight on outreach activities related to the integration of generative AI in audits and financial reporting. So that stemmed from our work as part of the data and technology research project. The rulemaking projects are those that deal with various PCAOB rules, and they are typically led by our Office of the General Counsel. Of these projects, I believe 2 have been one has been completed and 2 are out for proposal or have been issued for comment. In the bottom part of the slide, kind of shows you just what the project page looks like when you click on it. the page will provide you with the effective dates of all the projects. And if you click on the name of the project, it'll take you to a project page that shows you a little bit more information about, the background of the project. One thing I just want to kind of remind everybody that, while I'm kind of going over the agenda as it sits today, it's dynamic. Circumstances may change, so we update that as those circumstances change. At a minimum, the standard setting agenda is updated semi-annually. So with that background, I'm going to turn it over to David to provide a high-level overview of our proposals.
Thanks, Dominica. The three proposals on the top row are standard-setting projects led by the Office of the Chief Auditor. The first project is on designing and performing substantive analytical procedures. In June this year, the board proposed to replace the existing standard on substantive analytical procedures, AS 2305, which was put in place by the AICPA in 1989 and adopted by the PCAOB in 2003. The existing standard predates advancements in technology and greater availability of information that we understand are influencing current practice. The proposed standard would strengthen and clarify the auditor's responsibilities for performing substantive analytical procedures and address risks specifically associated with the use of technology-assisted analysis in substantive analytical procedures. The comment period for this proposal closed in August, and we're in the process of analyzing all of the comments that were received. The Firm and Engagement Metrics project stems from the recommendations of Treasury's Advisory Committee on the Auditing Profession back in the late 2000s. In 2015, the board issued a concept release for audit quality indicators. In the time since, the PCAOB analyzed comments on the concept release, reviewed voluntary disclosures by some firms, and considered recommendations from the board's investor advisory group. This work resulted in a proposal issued in April this year, under which some registered firms would publicly report certain information about their business at the firm level and at the engagement level. The board proposed 11 different metrics overall, and these include information relating to how engagements were staffed and structured, as well as retention and headcount related metrics. Not all firms would be required to report these metrics, and not for every audit. Under the proposal, firm-level reporting would be required for every firm that, during the reporting period, audits at least one accelerated filer or large accelerated filer, as defined in the SEC rules. And this would be reported on a new Form FM. Engagement level reporting would be required for every audit of an accelerated or large accelerated filer, and would be reported to the PCAOB on a revised Form AP. The reason for the proposed reporting is to provide additional information about firms that audit larger companies to interested parties, such as investors, audit committees, and other audit firms, such as yourselves. The comment period for this proposal closed in June, and we're in the process of analyzing all of the comment letters that were received. Lastly, in June 2023, the board issued a proposal to replace AS 2405, illegal acts by clients, with a new standard that would enhance the auditor's responsibilities to plan and perform procedures related to identifying and evaluating a company's non-compliance with laws and regulations. The proposal was issued last year and received a significant amount of comment. Earlier this year, the staff hosted a series of panels during a public roundtable to discuss certain aspects of the proposal and related comments received. And we continue to analyze all of those comment letters, as well as the feedback received from the roundtable. The two proposals at the bottom of the slide are part of the rulemaking projects being led by our Office of the General Counsel, and they deal with various aspects of a firm's interaction with the PCAOB. We won't be covering those today. Next, I'd like to turn from our ongoing rulemaking projects and hand back over to Dominica, who'll begin our discussion on the standards and amendments that have been recently adopted.
Thanks, David. Oh, we have a code word. So our code is 809. I'll give you guys a few seconds to get that in. 809. Okay, so for the recently completed projects, there are 4 that we're going to touch on, and they're listed on the slide. They're all very different, but they have the same goal, and that's to modernize the board's interim standards, improve audit quality, and better protect investors. You can find the adopting releases and additional information on these projects in the project pages that I described a little bit earlier. And I encourage everybody to read the adopting release. There's a lot of good information about how the requirements are intended to be applied. So for all completed projects, I really encourage everybody to look at that. So today I'll start with the technology amendments, which is the most recent project that was adopted. There you go. Okay, so the technology amendments were adopted on June 12th and approved by the SEC on August 20th. And they primarily affect two standards, AS 1105 on audit evidence and AS 2301 on responding to risks of material misstatement. The amendments address certain aspects of designing and performing audit procedures that involve technology-assisted analysis. And by technology-assisted analysis, I'm talking about data analytics, data analysis. Technology-assisted analysis has become more prevalent in practice. I'm not sure how many of the auditors in this room are currently using data analytics in their audit procedures, but we have observed that these tools are used by both larger firms, which tend to develop their own tools, and smaller firms that are using off-the-shelf software. Technology-based tools are being used to obtain and analyze more information and in different ways. For example, technology-assisted analysis has been used to identify risks of material misstatement, examine correlations between different types of transactions, compare company-produced information to auditor expectations or third-party information, and test the details of all items in a population or identify items for further investigation. The amendments are focused on technology-assisted analysis and are not intended to address all types of technology tools, other technology applications such as AI, but they are an important stepping stone to help modernize PCAOB standards. So I'll briefly provide an overview of the key amendments, starting with the ones made to 1105. First, there's a provision that the auditor uses First, there's a provision that if the audit uses an audit procedure for more than one purpose, the auditor should achieve each objective of the procedure. And this comes into play if the procedure is designed to be both a risk assessment procedure and a substantive procedure. It has to achieve each of those objectives. Next, the amendments address auditor responsibilities when evaluating the reliability of external information provided by the company in electronic form that the auditor intends to use as audit evidence. As you know, AS 1105 provides auditor responsibilities with respect to relevance and reliability of audit evidence, including requirements for testing the completeness and accuracy of company-produced information. And this new requirement relates to information in electronic form that the company has obtained from one or more external sources, which is then provided to the auditor. The amendments also emphasize the importance of controls over information technology for the reliability of audit evidence. And again, this comes into play as auditors obtain and use large volumes of information in electronic form that's provided by the company. And lastly, the amendments emphasize that the relevance of audit evidence depends on the level of disaggregation or detail of information necessary to achieve the objective of the procedure. And as an example, if you're doing an audit procedure that's using, let's say, property sales in a particular geographic location, it would be important to further disaggregate that between commercial property sales and residential property sales to get at a more relevant evidence for the procedure you're performing. With respect to AS 2301, the amendments include a new section that describes the tests of details and specifies the auditor's responsibility for investigating items identified in the test of details. And I want to highlight that these requirements apply to all tests of details, whether technology-assisted analysis is used or not. So under the new provisions, when performing a test of details, the auditor is required to apply audit procedures that are appropriate to the particular audit objective of each item selected for testing. So again, whether you're selecting items using sampling, specific items, or all items in a population, it's important that the auditor focuses on the purpose and objective of the audit procedure. When performing test of details, the auditor may identify items that require further investigation, for example, anomalies or exceptions in the test. The new requirements emphasize that audit procedures that the auditor performs to investigate those items are part of the auditor's response to risks of material misstatement, and the auditor determines the nature, timing, and extent of such procedures in accordance with PCAOB standards. In any event, the auditor's investigation of the identified items should include determining whether the items individually or in the aggregate indicate misstatements or deficiencies in a company's internal control. Okay, so with that, the effective date, sorry. So the effective date of the amendments are for audits of financial statements for fiscal years beginning on or after December 15th, 2025. So with that, we are going to discuss AS 1000 next. But before that, we got a code word. Our code is 282. Okay, on to AS 1000. So on May 13th, the board adopted AS 1000 on the general responsibilities of the auditor in conducting an audit. AS 1000 was approved by the SEC August 20th. And as a reminder, the general principles and responsibilities of the auditor include reasonable assurance, due professional care, professional skepticism, independence, competence, and professional judgment. These concepts are obviously not new. Currently, the general principles and responsibilities are addressed across 4 of the interim standards that were adopted by the PCAOB back in 2003. So AS 1000 replaces all of those standards, reorganizes and combines the general principles and responsibilities into one standard. So while the existing responsibilities have not changed, a number of updates have been made to achieve consistency with other PCAOB standards. And we think it's important to highlight a few of those. So the updates include, for example, eliminating outdated and inconsistent language. For example, references to GAAP rather than the financial reporting framework, using the terms should and must as defined by the PCAOB rules, referring explicitly to audits of ICFR, and compliance with PCAOB independence rules. And then just overall providing more specificity on how to apply the requirements. For example, directly aligning the partner's existing responsibilities for supervision and review with the exercise of due professional care. Another point I wanted to just highlight is that AS 1000 also reminds auditors of their obligation to protect investors and emphasizes that this responsibility provides an important context to the auditor when they're applying requirements of other PCAOB standards. And Board Member Stein referred to that this morning. So the new standard doesn't create new principles per se, but it provides just a more logical presentation, making the requirements a little bit easier to follow and apply. As noted on the slide, in addition to the new standard AS 1000, the project also included important amendments to other PCAOB standards, and I'd like to just touch on those briefly. The first set of amendments mentioned on the slide rescinds a standard that discusses the auditor's evaluation of whether financial statements are presented fairly, and that was in AS 2815. So those requirements have been clarified and moved into AS 2810, which deals with the evaluation of audit results. That reduces duplication and reduces the potential for confusion. It makes the standards a little bit easier to read and understand. The next set of amendments emphasizes certain responsibilities for the engagement partner for the supervision, including review of the work of other engagement team members. Again, these are not new responsibilities, rather a clarification of the extent of the planning, supervisory, review, and documentation activities that are performed by the engagement partner. So here are some examples. The engagement partner should review the documentation of significant findings or issues, which is required to be prepared under AS 1215, the documentation standard. The engagement partner should also review the documentation that is required to be reviewed by the engagement quality reviewer, which is described in AS 1220. And the engagement partner's review and evaluation of the work performed of the engagement team members must be completed prior to the report release date. Audit documentation should clearly indicate the engagement partner's review. The last bullet on the slide talks about, actually describes a change in the existing requirements. And under existing requirements, AS 1215 specifies that a complete and final set of audit documentation should be assembled for retention as of a date not more than 45 days after the report release date. And that's referred to as the documentation completion date. Originally, when that time frame was established, many work papers were paper-based, and allowing 45 days to complete that documentation made sense, especially for multi-location, multinational engagements. But since then, we've seen in practice that many firms are now using electronic platforms to house and maintain audit work papers. Another consideration is that the longer a set of work papers remains open, if you will, it poses a greater risk that improper alterations could happen because there's just a bigger window of opportunity to do so. So AS 1000 has accelerated the documentation completion date from 45 days to 14 days. And this time frame was designed to strike a balance of, again, not leaving a window of time that's open too long, but also thinking about investor protection and closing out the documentation completion date earlier. But we'll see, as I'll show you on the next slide, that the effective date for that is phased in. So the AS 1000 becomes effective for audits of financial statements for fiscal years beginning on or after December 15th, 2024. However, in response to comments on the proposal, revisions were made in the adopting release to take the phased-in approach with respect to compliance with the new documentation completion date requirement. So for firms that during the calendar year ending 12/31/2024 issued audit reports with respect to more than 100 issuers, the 14-day documentation completion date would be effective for fiscal years beginning on or after 12/15/2024. However, for all other firms, which is those that are 100 or less issuers, the documentation completion date, the 14-day requirement would be effective for financial statements of fiscal years beginning on or after 12/15/2025. So that gives firms, smaller firms, a bit more time to comply. So with that, I will hand it back over to David to discuss the quality control standard.
Great, thanks, Dominica. I think there's another CP code word of 669 before we do. Okay, great. So on May 13th, the board adopted a new standard, QC 1000, a firm system of quality control. And this was approved by the SEC on September 9th, which was earlier this week. And I've seen a question that's related to this come in, so I'll try and tackle that right now. So the question is, how should firms use the PCAOB comment letter to the SEC regarding QC 1000? And this is something that the SEC discussed and talked about in their approval order. And so I would advise you take a look there. But essentially they say the Commission views the statements in the PCAOB response letter as being on par with statements made by the board in the adopting release. And so I would treat it exactly as you would any statements that are made in the adopting release. So the new QC standard and related amendments to PCAOB standards, rules, and forms represents a significant rulemaking and will have an effect on all firms that are registered with the PCAOB. even those that do not perform any engagements under PCAOB standards. Every step of this rulemaking was informed by extensive research and outreach. This included reviewing PCAOB inspection and enforcement activities, discussions with the PCAOB advisory groups, the issuance of a concept release in 2019, and releasing a proposal for public comment in 2022. The current QC standards were adopted by the PCAOB on an interim transitional basis in 2003, but they were developed by the AICPA in 1997. In the ensuing 27 years, the auditing profession has changed significantly. It is no longer self-regulated, and firms have had to make changes to their QC systems in response to findings from PCAOB inspections. Also, the use of technology by firms in relation to QC activities and performing engagements has evolved. And some firms' management and organizational structures have also evolved to include more focus on centralization and globally consistent methodology. These developments in part led to a general support for strengthening the QC standards, including through risk-based elements and enhanced requirements for firms' governance and leadership. The new standard strikes a balance between a risk-based approach to QC, which should drive firms to proactively identify and manage the specific risks associated with their practice, and a set of mandates, including required risk assessment and other QC-related procedures, quality objectives, and quality responses, which should assure that their QC system is designed, implemented, and operated with an appropriate level of rigor. Before the PCAOB adopted QC 1000, the IAASB and the ASB issued their own quality control standards, ISQM1 and SQMS1, and there are some commonalities between QC 1000 and these other frameworks, such as the structure of the standard, and importantly, like those other QC standards, QC 1000 is risk-based and therefore inherently scalable. However, QC 1000 does have alternative and incremental provisions that the PCAOB designed to better serve investor protection and the public interest. These include requirements that align with US federal securities law, SEC rules, and other PCAOB standards and rules, retain important topics contained within the current QC standards, address specific emerging risks and problems observed through our oversight activities, including more specific provisions addressing the firm's use of technology, and more specific requirements for monitoring and remediation and the evaluation of a firm's QC system. The new standard also makes distinction between the firms that are simply registered with the PCAOB and those that are registered and perform engagements under PCAOB standards. Importantly, all PCAOB registered firms, even those that do not perform engagements under our standards, will be required to design a QC system that complies with the standard. This entails assigning QC-related roles and responsibilities, establishing quality objectives, at least annually identifying and assessing quality risks to the achievement of those quality objectives, designing quality responses to address those risks, designing a monitoring and remediation process, and documenting the design of the QC system. And the design of the QC system is based on the quality risks the firm would likely face if it performed PCAOB engagements. For firms that are registered and perform PCAOB engagements of public companies or registered broker-dealers, these will be required to implement and operate the QC system they design. However, it's worth emphasizing that QC 1000 is an extensive and comprehensive standard. For more details on the project, please see the standard setting page that we highlighted earlier. There are just a few other things I'll mention for QC 1000. The evaluation and reporting requirements, scalability of the standard, and the effective date. Under the new standard, the firms that are required to implement and operate a QC system will also be required to annually evaluate the effectiveness of their QC system and report the results of that evaluation to the PCAOB on a new, non-public Form QC. The firm's evaluation of their QC system must be performed annually as of September 30th, and the results reported to the PCAOB on Form QC no later than November 30th. Regarding scalability, QC 1000 is designed to be scalable depending on the size of the firm and its PCAOB auditing practice. The standard contains both provisions that scale down by tailoring for smaller PCAOB audit practices and provisions that scale up by focusing on the risks faced by the largest firms. In particular, there are incremental requirements for firms that issue audit reports for more than 100 issuers per year. As one example, these firms are required to establish an external oversight function for the QC system, composed of one or more persons who can exercise independent judgment related to the firm's QC system. There are also scalability considerations for firms with smaller PCAOB audit practices. Many firms perform only a small number of PCAOB engagements per year and may be subject to resource constraints that larger firms may not face. We've addressed the particular needs of these firms in a number of ways, including providing that a single individual may be assigned more than one of the QC system oversight roles required under the standard, and allowing firms that issue 5 or fewer engagement reports for issuers or broker-dealers in a year to include audits not performed under PCAOB auditing standards in some of their monitoring activities. Regarding the effective date, QC 1000 and the related amendments will take effect on December 15th, 2025. And so by next December, which is not that long away, firms will need to have their QC systems up and running. And so the first evaluation of the QC system under QC 1000 must be performed as of September 30th, 2026, and first reporting to the PCAOB on new form QC must be done by November 30th, 2026. Before we move on to our last topic, I want to quickly point out that once adopted and approved, each project gets an implementation page, which you can find by clicking this tab on the standards page of our website. This page includes a summary of the new standard and amendments, but also includes any relevant implementation guidance and resources that the staff issues. For example, we recently posted a brief knowledge check on the AS1000 implementation page, which is a series of questions designed to check your understanding of important aspects of the new standard and related amendments.
Yeah, and I'll just point out that in connection with the estimates standard and the other auditors amendments that my colleagues from DRI mentioned earlier this morning, we also have various implementation resources on those implementation pages. So we have some guidance documents, we have videos that go through all the detail of the requirements and highlight some key important information. So again, as standards become, are adopted and they, prior to the effective date, we try to come up with various ways to, have resources and post those to help auditors comply with those new standards. So stay tuned to that for the remaining projects.
Great, so the last item on our agenda today is the new auditing standard on confirmations. First, I think we're going to go to a polling question. So what is the effective date for the new confirmation standard? Is it for audits of financial statements for fiscal years ending on or after June 15th, 2025, on or after December 15th, 2025, on or after December 15th, 2024, or on or after June 15th, 2024? Do I just click it next?
Yeah, give it a second.
Okay, and the answer is A. It's for audits of financial statements for fiscal years ending on or after June 15th, 2025. So the new confirmation standard was adopted by the board and approved by the SEC late last year. And as we just saw, it's effective for audits of fiscal years ending on or after June 15th, 2025. Said differently, it's already effective for those audits with fiscal years that began after June 15th of this year. The new standard on confirmation replaces the existing one. One reason to replace the existing standard on confirmation is that it became outdated. The existing AS2310 was initially written by the AS/EPA and it took effect in 1992. The emerging technology in 1992 was a fax machine and most confirmations were done on paper and mailed. Fast forward 32 years and the emerging technology is Gen AI and many confirmations are done electronically. Second, confirmation intermediaries have entered the picture. In fact, numerous banks in the US and abroad require the use of an intermediary and will not otherwise respond to a confirmation request. Finally, there were several high-profile frauds, such as Parmalat and Wirecard, and numerous other cases where auditors did not obtain sufficient appropriate audit evidence when using confirmations, including confirmations of cash. So now let's take a look at some of the key provisions of the standard. And this slide shows the specific areas that we're going to cover today. But before we dive into each of these, let's take a minute to talk about confirmation in general. What sets confirmation apart from other audit procedures is the type of evidence that it provides. Generally, under PCAOB standards, information obtained from a knowledgeable source that is independent of the company is more reliable than evidence obtained only from internal company sources. And evidence obtained directly by the auditor is more reliable than evidence obtained indirectly. Confirmation provides you with evidence that has both of these characteristics. It's external and direct. Put simply, a properly performed confirmation provides good audit evidence. Now let's connect this point with the items listed on the slide. First, we'll discuss the confirming party. For confirmations to provide high-quality evidence, the auditor should maintain control over the confirmation process. A big part of maintaining control is directing the request to the appropriate confirming party. So this is the first set of requirements that we're going to look at. Next, we'll talk about negative confirmations. Not all type of confirmations provide the same level of evidence, and we'll look at negative confirmations that do not provide as much evidence as positive confirmations. Finally, we'll look at cash and accounts receivable and discuss how high-quality evidence should be obtained for these accounts. So starting with confirming parties, and specifically the requirement in paragraph 9 of the new standard, which states that the auditor should direct confirmation requests to confirming parties, individuals or organizations who are knowledgeable about the information to be confirmed and determine that the confirmation requests are properly addressed. The point of this provision is that the confirmation request reaches a knowledgeable third party, which can either be an individual or organization, who then provides the requested information back to the auditor. The new standard does not prescribe the nature or extent of procedures to be performed by the auditor when making the determination that the confirmation requests are properly addressed. Rather, the auditor can tailor the procedures to the facts and circumstances of the audit. With that said, today I'll discuss some procedures that auditors may perform in practice as part of determining that confirmation requests are properly addressed. First, some auditors compare some or all confirming party addresses, which are typically provided by the company, to physical addresses or email domains included on the confirming party's website. When an auditor uses an intermediary to facilitate direct electronic transmission of confirmation requests and responses, the new standard requires that the auditor evaluates the implications on the reliability of the confirmation process. Appendix B of the new standard discusses procedures the auditor performs regarding the intermediary's controls that address the risk of interception and alteration of confirmations. The auditor may determine that relevant controls at the intermediary include controls related to validating the addresses of confirming parties. In such a situation, the auditor may be able to determine that audit procedures performed in accordance with Appendix B of the new standard are sufficient to determine that confirmation requests are properly addressed. In situations where the auditor determines that the intermediary's controls that address the risk of interception and alteration do not also include controls related to validating the addresses of confirming parties, the auditor would need to perform other procedures to comply with the requirements of the standard. Before we move on, I think we've had a question. So the question is there significant deficiencies in the current confirmation process? Well, I think for all the reasons that I just discussed, that the standard is very outdated. There's a number of considerations in the new standard that aren't contemplated in the old or existing 2310, such as how to think about it and use intermediaries as part of that facilitation of sending and receiving information from a confirming party. And I think next we've got another polling question to lead us into the next topic. So true or false, the new confirmation standard prohibits the use of negative confirmation requests. Correct, the answer is false. And we'll discuss negative confirmations in more detail now. So just as a reminder, a negative confirmation request is one where the auditor requests a response only if the confirming party disagrees with information provided in the request. The new standard tells us that negative confirmation requests provide less evidence than positive confirmation requests. It then tells us that under the new standard, negative confirmation requests cannot be used as a sole procedure to address a risk of material misstatement. They can still be used, they're not prohibited, but on their own, they won't provide sufficient appropriate audit evidence. they need to be paired up with another or other substantive procedures. This is a change from the existing standard. And one of the key reasons for this change is that people may simply ignore a negative confirmation request, even more so than they did 32 years ago. Think of all the spam that you get on paper and electronically. Many of us send much of our incoming mail directly through a spam filter. Some banks even instruct their customers not to open or respond to a request that they don't expect. So there's a high likelihood that a negative confirmation request would not be considered by the recipient. This could either be because the recipient would treat the request with suspicion in the case of a potential phishing attempt, or not receive it at all if the emailed request was caught in a spam filter. The new standard does not include examples of other substantive procedures that may be used in conjunction with negative confirmation requests. We believe that including examples in the new standard could be misperceived as establishing a formal checklist, whereas determining the nature, timing, and extent of audit procedures that provide sufficient appropriate audit evidence would depend on the facts and circumstances of each audit. The new standard, however, does provide examples of situations in which negative confirmation requests, together with other substantive procedures, could provide sufficient appropriate audit evidence to address a risk of material misstatement. So what are those situations? The examples that are included in the new standard are shown on the slide and are as follows. The auditor has assessed the risk of material misstatement for the relevant assertions as low, and obtained sufficient appropriate audit evidence regarding the design and operating effectiveness of controls. Another example is the population of items within the account balance or class of transactions for which the auditor considers sending negative confirmation requests is composed of many small, homogeneous items. The final example is the auditor expects a low exception rate in response to negative confirmation requests and has a reasonable basis for this expectation. Dominica, I think I'll hand it over to you now to discuss confirmation of specific accounts.
Okay. Thanks. Okay, so let's turn to confirming cash and accounts receivable. So this slide shows what is required under the new standard. For cash and accounts receivable, the auditor is required to perform confirmation procedures or otherwise obtain relevant and reliable audit evidence by directly accessing information maintained by a knowledgeable external source. So let's take a look at a couple of examples, starting with cash procedures. Okay, so in the new standard, cash is described as cash and cash equivalents held by third parties. The requirement to actually confirm cash is new, and that may be surprising because in practice, many auditors typically confirm cash. But there was not a specific requirement to do so in our existing standards prior to this standard. So as we discussed, under PCAOB standards, evidence obtained from a knowledgeable third party directly by the auditor is more reliable than information produced by the company or information obtained indirectly. So the explicit requirement to confirm cash is important, especially in light of some of the high-profile frauds that David mentioned earlier. So this slide outlines several different procedures that would satisfy the requirements of the new standard. So in the first example, it's sending a confirmation, right? The auditor sends a confirmation sends a confirmation request and receives a response directly from the financial institution. The auditor may do this by email, by snail mail, etc. In the second example, the financial institution would instruct all auditors to send confirmation requests using a confirmation intermediary. And as David talked about a few minutes ago, he talked about evaluating the implications of using an intermediary. So let's assume for the purposes of this example that the auditor has evaluated the implications of using the intermediary on the reliability of the confirmation process and was satisfied with the results. The auditor would then use this confirmation intermediary to facilitate direct electronic transmission of confirmation requests and responses. In the third example, the auditor obtains read-only access of information maintained by the financial institution about the company's cash balances directly online through a secure website using credentials furnished to the auditor by that financial institution. So it's important to note that the standard doesn't prescribe a particular way of directly accessing information maintained by a knowledgeable external source. Depending on the company that you're auditing, you may determine that at least currently confirmation is still your best choice. But the key here is that as new tools and techniques become available, they're going to be appropriate under the PCAOB standard. So we've modernized the current confirmation standard to account for that. Okay. So what happens if the auditor chooses to use a confirmation but cannot obtain evidence for some of the items selected for testing? For example, in the case of non-response or incomplete response. So this slide shows the requirement of the standard and an example of the alternative procedure. Under the new standard, in the case of a non-response or an incomplete response, the auditor should perform alternative procedures. And Appendix C of the standard outlines what those procedures would be. So as an example, as an alternative procedure that would satisfy the requirements of the new standard, the auditor obtains information about the company's cash balances by viewing information directly on a secure website of that financial institution. In this example, the auditor might verify the reliability of such information by addressing the validity of the website, for example, the security certificate or the domain. And in this case, the information viewed by the auditor could be accessed either by the auditor using login credentials provided by the company or by company personnel. So let me switch to the last item of on the agenda today, which with respect to confirming accounts receivable. So let me start with, but before I do that, code word is 542. 542. Okay. So let me start with what hasn't changed as it relates to confirming accounts receivable. The new standard does carry, yep. Oh, Brian, the code's not valid, it says. He'll look into it. Thanks for calling that out. Okay, so for accounts receivable, what hasn't changed is that the new standard carries forward the existing requirement to confirm receivables. And accounts receivable in the new standard includes receivables that arise from transfer of goods or services to a customer or a financial institution's loans. Unlike with cash, there may be many scenarios where using confirmation procedures or other ways of accessing information at the third party is not quite feasible. For example, there are some industries that have a history of low response rates, such as healthcare, utilities, or there could be situations where customers are advised by a government agency, like a banking regulator, for instance, to avoid providing personal or financial information in response to a confirmation request. So this not feasible determination is based on the auditor's experience, such as prior years' audit experience with the company or similar engagements where the auditor didn't receive confirmation responses and expects a similar result. So if it's not feasible to obtain external information directly through confirmation, the auditor is required to obtain external information indirectly by performing other substantive procedures, including test of details. And it's important to highlight that the requirement includes performing tests of details. Performing substantive analytical procedures in this scenario would not be sufficient to overcome the presumption to confirm. Okay, so let's take a look at a couple of examples on this slide. But first I want to just clarify what we mean by external information and obtaining it indirectly. External information is information that has not been produced by the company. For example, a flat file received from the company's bank is an example of external information, but an invoice issued by the company is an example of information produced by the company. Although the flat file is in the company's possession, it can still be traced to the bank that produced it and sent to the company. Obtaining external information indirectly means that it is not obtained from the external party where it originated, but by some other means, like from the company. So for example, the auditor could obtain external information indirectly by examining subsequent cash receipts, shipping documents from third-party carriers, customer purchase orders, or signed contracts. The standard does not prescribe the nature, timing, and extent of these audit procedures. The auditor will determine it based on facts and circumstances, and an auditor may determine that it is necessary to perform more than one of may determine to perform more than one of such procedures to obtain sufficient appropriate audit evidence. While the standard requires confirmation of cash and accounts receivable, it also provides for auditor consideration of confirming certain other items. For example, for significant risks of material misstatement associated with either complex transactions or a significant unusual transaction, the auditor should consider confirming those the terms of those transactions that are associated with a significant risk of material misstatement, including fraud risk. Examples of such terms would include oral side agreements, undisclosed written or oral side agreements where the auditor has reason to believe that such agreements may exist, bill and hold sales, and supplier discounts or concessions. So with that, I believe we have another polling question. Does the new confirmation standard require the auditor to communicate to the audit committee regarding their use of confirmation? Yes, no, or it depends. Give you guys a minute here. Yes, our favorite answer, it depends. And that is the correct answer. And it depends on whether there is a significant risk associated with the cash or accounts receivable being confirmed. So under existing PCAOB standards, the auditor is required to discuss with the audit committee the significant risks identified during the auditor's risk assessment procedures. Under the new confirmation standard, for significant risks associated with cash or accounts receivable, the new standard requires the auditor to communicate with the audit committee when the auditor did not perform confirmation procedures or otherwise obtain audit evidence by directly accessing information maintained by a knowledgeable external source. Okay, so with that, it looks like we have a couple of questions.
Yeah, there was one. Have there been any examples where the use of the intermediary resulted in a material misstatement? I mean, so presumably the account being confirmed was materially misstated prior to the auditor trying to obtain evidence with regards to the account. If the question is more, and so no, I don't think it would result in a material misstatement. If the question is more, has there been any restatements or correction of material misstatements maybe? I mean, off the top of my head, I don't have that information right now, but again, what the standard focuses on is potential risks when sending confirmations, including ensuring that it's going to an appropriate confirming party. And these risks exist whether an intermediary is used or not. And so that's why the standard considers and includes requirements for when the auditor uses an intermediary to help ensure that sufficient appropriate audit evidence is obtained.
Yeah, and we have another question here. Can accounts receivable balance that in total or not individually significant can confirmation be determined to be not required? So the new confirmation standard does not specify the extent, nature, timing, and extent of procedures to be performed. That it's not prescriptive in that way. So I would say it would just depend on the facts and circumstances of your engagement and the risks that are associated with those receivables. Let's see if there's anything else.
I don't think so.
No. Okay. Okay, I think that's all
Great.
that we have for today. Thank you so much.
Thank you.